Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I offer in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day, all. Ira Epstein with your agriculture update for the weekend of Friday, the 27th of October, 2017, about 3:50 p.m. Central Daylight Time. So the events of the weekend. Well, last week, we went home on Friday. We had what was called, I thought, a bearish cattle on feed report, and the market went down on Monday, never looked back. It just went up the rest of the week from that point on. So much for getting bearish, more cattle on feed, 5% more than the market was looking for. It didn't matter. When we look at the grain market, we're still feeling the pressure here of the corn market down. Wheat's probably getting a certain amount of pressure because of the strong dollar, which starts hurting our wheat business in comparison to where wheat is in the rest of the world. That's one thing you look at. Beans getting a little bit of a bid because in Brazil they've got some dry weather, so the market looks at that at this time of the year. Our harvest is probably about 80% done. There's still more to go. We'll see if the market can have any legs from here or if the market starts drying off, as I like to call it. In the metals, you went down pretty hard into the gold. I had written, if you get my report, my nightly report, that I thought that the 1264 zone, that's what I wrote last night, and I can prove it, was going to prove difficult to get through today. Market came $10 back off of it. So let's go to the soybean chart, and I think what you can say is the market is consolidating right here. What's it going to do is the big question. Is the market going back to $9, or is it going to break out over the 10.15, 10.20 area and say it's putting in a bottom? We have to see what China wants. They're a big buyer of our beans. It's cargo upon cargo. But with the dollar getting stronger, the question is, do they slow down the purchases? What goes on? When we take a weekly area chart of closes, just closing prices, the market's been in an upthrust. We've been in a corrective mode. We're down for the week, down 3.5 cents to 9.75 1/4. That's how you look at this point. You take a look at the weekly bar chart, and you can see how you've come up and you're sort of rolling on the market at this point. When you come to the weekly swing lines, a little different story. That's what I love about swing lines. When you look at this, I can get one picture that you're rolling over, and the swing lines still are showing higher lows, higher highs on a weekly basis. You pulled back into support right here at the 18-week moving average. You didn't quite hit it. The low of the week was 69 3/4, 68 3/4, 69 is that number. But it did hit the 100-week, and it's maintained itself there. I think if the market takes out 952.5, you have a big problem. Now, admittedly, it's 23 cents away, and you might say to yourself, well, it's already down 23. What's he talking about? Well, it would break the pattern, be under all the key averages is what I'm getting at. When I look at Bollinger Bands, they have not been in play since back in July. You can see that. That's the last time you hit the market on the upside, and since then the market is just sort of hanging in here, trying to figure out what to do, and momentum has totally flattened out. Take a look at these readings. They're just basically going sideways in the 50s at this point. The market doesn't have a story just yet. Start picking yourself up, take out this week's high of 983 1/4. That might get some traders saying, the market held its support, it's ready to move out and up again. Take out the low side, like I said, a different story develops. When you get to the meal market, on the weekly chart, you still have the higher lows, higher highs. Look at how sideways this market has been going. It's a difficult market if you've been trying to play for a big move one way or the other. It's not there. The high to low in this market is, what, $23. That's not very much. So the volatility is pretty much out of it. I remember meal swings more like this did you have action come from a sideways action up rather dramatically or down. But that's not in this market right now, and we see that in the daily volume also. You can see momentum has gone flat. Take out 305 and a quarter, and you might be targeting 288 and 70. Hold this area and take out this week's high of 317.90. You'll probably get people saying maybe we're back into that uptrend, going back to the 320s plus. Soybean oil has not had a trend as I define a trend. A trend typically has higher lows, higher highs for an uptrend, lower highs, lower lows for a downtrend. This is a broad trading market. It's got a higher high and a low that took out a previous low. It went from an upper Bollinger Band, just missed hitting the lower one, came back, and it's got upside bias as it's over the 18-week average, and momentum's pointing up. Not trending, but if it wants to make a move, 35.41. We still haven't heard that I've seen anything from the Commerce Department on putting tariffs on some of the oil coming in from Argentina. We'll see if that's going to be the case or not. In the corn market on a weekly basis, a lot of resistance here in the 361, that's the 100-week moving average, down to 357 and a quarter. The market today was able to set up a pattern of higher lows with an outside week up and a higher high. Now, if you look at the high of this week, which is 355 and a quarter, hasn't quite gotten into the resistance up here, but is this going to be a low area in the market is what I think a lot of traders are looking at. If we take out this week's low this coming week, then I think you're going back to the lower Bollinger Band. So that's how I'm sizing the market up right now. In the wheat market, I still see a bearish scenario. I see the lower highs, the lower low. We don't know where this low is going to end up. I see a market that got up to the 100-week average right here, the green, and then the 18-week average failed back, and momentum refuses to point up. In the cocoa market, if you take a look at the daily chart, it's been a wonderful chart. Every time the traders have been buying for the past, 8 weeks, 3 months, the 18-day moving average, it's been going back to the upper Bollinger Band. We're in resistance, as you see on the weekly chart, but we've been there for a while. Momentum is starting to stall a bit. It had been pointing up, and let me show you what I mean by that. Notice how the red was still pointing up with the blue. Now it's starting to round ever so small. If this market gives up ground, it could get back to 1996. That's over 100 points away, so that's a big number to be looking at. If it decides to move forward, 40 higher at the upper Bollinger Band at 2155 is where I'd see resistance. In the sugar market, the daily charts broke out today. The weekly chart, not so. The weekly chart now has a pattern of higher lows. 1384 is the same as back here at 1384. So we have a double low, the same number. The market rallied sharply today, just missed the upper Bollinger Band. So I have a pattern that I can go back in time and say I don't have the higher lows and higher highs. I've got a lower high, higher low developing. I'm waiting to see what happens. But momentum has picked up. You see that? The bias is up. So that's your first resistance point on the market. Is this enough to form something of importance if you start pushing the upper Bollinger Band out? And that'll be the big question. If it does, and it decided to get back to the 100-week average, well, that number's around 17 cents. In the coffee market, momentum started to wane on the downside, and you saw that today. You've been in a downtrend. Lower highs, lower lows. Didn't quite have the muscle to get to 120.62, but that game isn't necessarily over. Until you take out 132.70, I still see the pattern of lower highs, lower lows. I see the market under the 18-week average. I see downside momentum trying to wane. It hasn't yet kicked up that red line. I'm waiting to see if it does. In the cotton market, it did pretty much what we had thought it might do. It's fighting a battle at the 100-week and the 18-week average of closes. That's what I'm seeing. The market has had problems staying up and over this 18-week average, hasn't been able to do it. Momentum is still down. Bias is down. Bit of a difficult chart. As I said, in the cattle market, you had a cattle on feed report that I thought should have broke the market. It lasted hours, and that was it. And the market reversed. You've got higher lows, higher highs. Maybe it's going to target, I don't know, maybe it's going to target the 100-week average in the upper Bollinger Band. The bulls have grabbed control of the market. Bias up, you're over the 18-week average. Momentum up, I had the wrong point there, right there. Higher lows, higher highs, that's your next target. You'd have to take out 109.62.5 to convince me that the market's anything but bullish. In the hog market, it's reaching to the upside, and notice how momentum has turned the corner now. So we have a market that's got higher lows, higher highs. It's got downside biases that's under both the 18-week and the 100-week moving average of closes. So I have the downside bias. In other words, everything's fighting each other right here. Should the rally continue, I'm looking for in this neighborhood of 67.60s to 7100 to be the resistance zone. You'd have to take out 58.85 to get us bearish. So we're seeing a number of commodities that are fighting to come out of downtrends. Interesting, and that's with a stronger dollar at work here. So I find that all pretty darn fascinating as the crow flies, you might say. So in looking at what we do as a company, you know, one of the things I can tell you is, yes, I make available my research if you haven't tried it before. Otherwise, it's a subscription basis. But this is something you're not going to see as well. We have our own staff writers. We really hone in and write a lot. The weekend comes, we don't go away. You'll see that we put out stories over the weekend. And on Sunday night, we're filling you up again because the market's going to trade. So we're giving you in all these different categories so that you can work with. Do you need to get them all? Of course not. You pick the ones you might be interested in, and we'll be happy to show you what our customers, those that have trading accounts with us, have access to. How do you get it? Because it is easy. You can either call us, we'll get you on. You can also go to our website, www.iraepstein.com, sign up on our forum for it. You can click up here if you're watching me on YouTube. And underneath us, on many different websites, says click here for Ira's free information. Do so, and we'll get it in your mailbox. I'm Ira Epstein. You have a great weekend, and I'll see you all Monday.